Here is a recent trade that I just finished on GPBJPY, a 3% gain on this trade, helping my account to go all the way up. So how did I know that this trade is going to move in my favor? Well, all thanks to this simple candlestick pattern that I spotted. So today I want to break down a few candlestick patterns that I use to catch moves just like this one. So I will be talking about the two specific ones, the bullish and the bearish engulfing pattern and the hammer pattern. So let's start the video. So let's start with the bullish and the bearish engulfing pattern. In this particular case, I will be talking about the bearish engulfing pattern. So what is a bearish engulfing pattern? So this is what we call a bearish engulfing pattern. A bearish engulfing pattern forms after an uptrend when market shows a sign of reversal. It is made up of two candles. The first candle is a bullish candle and the second candle is a bearish candle. But the second bearish candle completely engulfs the previous bullish candle, meaning that it opens higher than the previous bullish candle but closes significantly lower than the previous bullish candle. So what does this tell me? This simply tells me that the buyers, the bulls, have lost the strength and the sellers are stepping in with strength. The sellers are overpowering the buyers. This pattern indicates that there is a shift in momentum to the downside. So market is likely to go down from this point. So what is the next step after spotting this pattern? You have to simply go to the 5 minutes time frame or the 15 minutes time frame, whatever you want. Let's go to the 5 minutes time frame. So this is where I took my trade. So the 4-hour candle closed here and I jumped in the cells right away. And how much did I aim for? This time I went for my 3-hour target. So let's see, how did it go? So here you go, a simple candlestick pattern that you can use on your daily basis. But before using this candlestick pattern, I want you guys to backtest this. And before taking the trade, I want you guys to collect all the evidences, all the confluences before taking a trade. So what do I mean by that? This alone candlestick pattern won't serve you well. So what you want to do is you want to collect all the evidences that show that price is gonna go bearish from here. So I'm gonna walk you how I think about this trade. So this is a bearish engulfing pattern, but before taking a trade, what I did was I collected all my evidences like this one. So this is a resistance area. Price came here and then it rejected. It came here again, rejected. Came here again, rejected. And it came here and then it made a bearish engulfing pattern. So this means that the price is tired and is not ready to go up, meaning that the buyers are no longer interested in taking the market up and the price is likely to go down, right? And you can scale down to 15 minutes time frame or 5 minutes time frame. You can even go to 15 minutes time frame if you want. You have to choose your time frame according to your comfortability. Here is the example. On 15 minutes you can take an entry as well and you can place your stop loss just above this high and then you can just aim for your targets. Whether you want to go for 2 hours or 3 hours, I really don't care. You can even go for these targets like this one. You just want to aim for this low and just you put your targets and just you leave the screen. So let's move on with the second example, which is the bullish engulfing pattern. So what is a bullish engulfing pattern? It's simply the completely opposite of a bearish engulfing pattern. So this is a bullish engulfing pattern. Again, it's made of two candles, one bearish candle and the second bullish candle. The first candle is bearish and the second candle is bullish. And the second candle completely engulfs the previous bearish candle and it opens lower than the previous bearish candle and closes above, significantly higher than the previous bearish candle. So what does it indicate? It indicates that the bears are no more interested in taking the market down and the bulls have stepped in with strength, overpowering the sellers, meaning that the price is likely to go up from this point all the way up. So after spotting this candlestick pattern, what are you gonna do? You aren't just gonna simply jumping into the trades. What I want you to do is, I want you guys to tell yourself a story before taking any trade. So for example, for me, this was an uptrend, and this is a higher low, and price moved away a little bit from here, and it came back again to take a support, and then it has made this candlestick pattern, and now the price is ready to go up. And also this is a double bottom, so what I'm expecting is the price to go up from here. So let's talk about the hammer pattern. So this is a hammer pattern. This is a hammer pattern. It consists of only one single candle. It has a smaller body, but it has comparatively larger wick than the body. It forms after the end of an uptrend or a downtrend. In this particular case, after the end of an uptrend. So what does this single candle tells me? It simply tells me that the buyers have tried to take the market up, but they have failed, and the sellers have stepped in the market with strength, and they are going to try to take the market down from this point. So where did the market go after this candle was formed? Let's see. And you can see the market fell after this candle was formed. You could have ended over here. You could have placed your stop loss over here, and then you could have just aimed for this low, or maybe you could have just went for the 5 hour target. I really don't care. You can either go to 15 minutes or the 5 minutes to take your entry on the smaller time frame. It's totally up to you. But again, what I want you guys to focus on is when you have spotted any candlestick pattern, it could be the hammer pattern or the bearish or the bullish engulfing pattern. I'm gonna talk about this again because this is really important. I want you guys to tell yourself a story for this. Again, I'm gonna explain with this example. Before taking this trade, what I am talking to myself is that, so this is a point of interest. The price was too bearish. It made a pullback. It tried to go down, then it failed. It made again a pullback. This is a very good single candle pattern showing that the sellers are interested to take the market down. They tried to take the market down, but then again, this bullish engulfing pattern was formed. What does this mean? This means that the market is likely to go up from here. They brought the market over here, but again, at this point, after these two highs, this is a point of interest. Why? Because this has become a resistance for the market, that it is going to face rejection in going up. So even though this bullish candle has closed above this resistance level, but for me personally, it did not close bullish enough, convincing me that the price is ready to go up. So I did not believe that the market has changed its momentum to the upside. I am still bearish at this particular time. So what I do, I just wait for any candlestick pattern to form, and then I'm gonna go ahead. So this is the story that I am telling to myself, and I want you guys to do the same before taking any trades. Even though if you have spotted the candlestick pattern that is working in your favor, I just want you guys to tell yourself a story to collect all the evidences in your favor. So these are the two simple candlestick patterns. When combined to the other factors like support and resistance, like this one, they become really powerful, and they can give you high level of profitability. So next time when you are analyzing the charts, do look out for these patterns. They're really gonna help you a lot because they are really simple and they can make a lot of difference. I will end the video now. I hope you liked this video and you found something useful from it. Do like the video and subscribe if you haven't subscribed yet. I will catch you in the next one. Until then, trust the process and take care.